Hi everyone, so today I'm going to be doing a new company called SharkNinja. This is going to act as a stock analysis video. So let's get right into this. I'm going to go ahead and share my screen and we are going to take a look on, or really what the company does, how they make money, how they generate revenue. And luckily we have this nice company here that explains it. It's called Matrix, matrixbcg.com. It's very good. I've used it before, but regardless. So SharkNinja's core operations are centered on creating and delivering innovative home appliances. The company designs, manufactures, markets, and distributes products under its distinct Shark and Ninja brands, focusing on solving everyday consumer problems. This approach underpins how SharkNinja works, ensuring a strong consumer connection. Probably a lot of you have seen them in Walmart. They sell blenders, they sell coffee machines. I've seen it before myself. They sell it also on Amazon too. So it's great to see. But SharkNinja operates by designing, manufacturing, marketing, distributing home appliances. The SharkNinja brand focuses on cleaning solutions, while Ninja specializes in kitchen appliances, aiming to simplify daily life for consumers globally. So yeah, more or less so that is what they do. Now to take a look at just a little bit of more the qualitative, you could see their website, and yeah, they have vacuums, kitchen, outdoor stuff, parts and support. This for like grills and things like that. Some beauty things like face mask and all that. They do sell that. But yeah, just super interesting. Thought I should share it as well. So yeah, it looks great. Now the financials, right? Which is very important. First step is the free cash flow. Right now, 392 million, next 3 years, 1 billion. So certainly more than a double. Really good for them. It looks good. The financial health of the company, you have to be a little bit careful of. They have a lot more debt than they do cash. So it does say that you need to be a little bit careful reducing debt, insufficient data, but yeah, the debt is usually higher than the cash. You got to be a little bit cautious with it. 745 million compared to the cash, which is 263 million right now. So yeah, just be aware. Now, when we take a look at their earnings are quite good as well. So the earnings were, let's see, the earnings came out for Q3 2025 on November 6th, and they both beat both bottom and top lines. So really good. And this was the 10th consecutive quarter of double-digit growth. Net sales increased 14.3% year over year to 1.63 billion. Net income surged 42.6 million to 188.7 million. They are GAAP profitable, so yeah, you don't have to worry about that. And international sales saw increasing by 25.8%. And the full year ahead, due to the strong third quarter, SharkNinja increased its guidance for the full 2025. The company now expects net sales growth between 15 to 15.5%, adjusted EPS to projected to be $5.05 to $5.15, and adjusted EBITDA to anticipate to be between 1.1 billion to 1.125 billion. So yeah, really good and good for them. They did very well altogether. And yeah, they, just to mention too, the adjusted net income per share increased 24% to $1.50, beating the consensus estimate. So yeah, just altogether really good for them. Now, when we take a look at the DCF, my DCF for them, they're still 8% overvalued. They've been growing very much. They're up like 300% since they went public 2.5 years ago now. And really they're, yeah, overvalued more or less. So that was historical growth. This is Wall Street, and they're still overvalued by 4%. So they're slightly overvalued, but I still think they're worth a keep on the watch list. They do look good. Now, Tipranks, okay, very important. They're a strong buy. 19% upside, 8 buys, 1 hold. So really good. Low of 110, average of 142, and a high of 175. And they're currently trading at 118 or 119. So yeah, looks good for them. The stock right now is currently at 118, like I said. 52-week low is 60.50, and 52-week high is 129.19. So you got to be a little bit careful here, because they are towards the high end of their 52-week high. So you will be buying closer to the top. So you do need to be a little bit careful there on that front. Now, the last thing we need to check is their net income, because they did mention it that it's doing very well, but let's see their past. So they have been GAAP profitable or net income positive for quite a while, pretty much since it became public. So 331 million 2021, 232 million 2022. This is when they actually became 167 million in 2023, 438 million 2024, now 574 million. And they have Q4 to go on. They have Q4 to report, so and that's going to come out I think in February as well. So I think it's going to look pretty good overall, and the company's doing very well. And I definitely think it's worth a watch and to keep it on your watch list. All right, thank you everyone, appreciate it.